if your car was deemed what's referred to as a constructive total loss as a result of the damage it received in a crash, then you may make what is referred to as a property damage liability claim against the driver who caused the damage to your car. The valuation will be, for purposes of a property damage liability claim, the fair market value of your vehicle at the moment prior to the crash minus the value of the vehicle in a damaged condition, which of course is typically your salvage value, which is obviously very less. So between those two amounts, that total would result in the amount that you can claim for your property damage liability claim for damage to your car.
What the Florida law allows, which is unfortunate in a lot of instances, is what's called fair market value of the vehicle. That's our actual cash value of the vehicle. That's all you're going to get for the vehicle. And sometimes that's a problem. We've seen this in many cases. I had a client one time whose mother bought the vehicle for him. It's the only new vehicle he'd ever had. His mother was in a nursing home, and he said, "I can't tell my mother my car's been totaled. She'll be so upset about this. This car has more value than what they say it has because it has sentimental value." There's nothing we can do. There's nothing the law allows you to do for something like that. If you owe more than the vehicle's worth, that does become a problem. If you owe more than the vehicle's worth, if you don't have what's called gap insurance, there's going to be an issue where they're going to pay the market value of the vehicle, but you're going to owe $2,000 or $3,000 more, and unfortunately, you're going to have to make up that difference. It's one of the things, the damages we would get from the other side eventually in the case, but it does become a very frustrating factor in Florida law that it's not replacement value, it's fair market value of the car, and sometimes those are not one and the same.
Because Florida has a requirement for property damage liability insurance in most circumstances, when you are not at fault and your vehicle was totaled as a result of the negligence of another driver, the property damage liability insurance company for the at-fault driver will handle your claim, and they will pay you the value that we've identified previously as the difference between the fair market value at the moment immediately prior to the crash and the salvage value. And then based upon that payment, when they make that payment, they will insist upon you giving them the title so that they can declare the vehicle a constructive total loss, and they will actually, the insurance company, will notify the DMV. Should you notify the DMV yourself? You could, you may. It's nothing incorrect about doing that once you know the vehicle is going to be a constructive total loss. If you have a situation where your vehicle has been declared a constructive total loss, and you choose to file a collision claim with your own company, then they do have a right under the law to rate you for purposes of future insurability. And so there would be a risk if you pursue a collision claim against your own company that you would end up with a higher rate. But that does not apply if you file a claim for property damage liability insurance against the at-fault motorist.
Whether your insurance rates are going to go up depends mainly on whether you're at fault in the accident. If you have an at-fault accident, you cause the accident, there's a very good chance, depending on your insurance company. There are some insurers now saying we have accident forgiveness, a one-time accident forgiveness. You have a policy like that, you may not have your rates go up. But the reality is that most insurance companies are going to use that as an opportunity because they paid out on your case, your claim, they're going to raise your rates. So if you're in an at-fault accident, your rates are going to go up. If you're not in an at-fault accident, the other side causes the accident and your vehicle's totaled, and the other side pays for your vehicle being totaled, you're going to be fine. Your rates shouldn't change. Your insurance company hasn't paid anything, so your rates should stay the same. A total car shouldn't affect your credit. The only problem a total car would have on your credit is if you owe more than that vehicle's worth and you can't pay the difference when you go to in that transaction. So let's say your vehicle was worth $12,000, but you owed 15 on it because you either had a bad loan, unfortunately, or you just paid too much for the vehicle, unfortunately, and you owe $3,000 more than it's actually worth. That, and you can't pay that off, that could affect your credit. But any other time, if the vehicle's totaled, it'll wipe it out. What they'll do, the insurance company will pay directly to your finance company. Anything left over goes to you, and it should never affect your credit.
The determination of whether or not a vehicle can be totaled more than once is a somewhat sophisticated question, actually, and it has to do with the nature of the way that the Department of Highway Safety and Motor Vehicles handles so-called salvage titles. And once the vehicle is declared a constructive total loss and the salvage is then disposed of, if it is sold to someone who wants to try to repair it and then apply for a so-called rebuild title, they could get one in theory, and if they did, then in theory, if the vehicle was damaged again so badly that it couldn't be repaired, then it could be totaled a second time.
In a case where you had an accident, had a crash, and your vehicle turns out it's worth less than what the insurance company's offering. For some reason, you've paid too much for the vehicle, or you were in a bad loan situation. Your vehicle, for example, is worth $10,000, but you owe $13,000, and there's a $3,000 gap. Unfortunately, the Florida law says all the insurance company owes, or all the other party owes, is fair market value for that vehicle. And that's determined somewhat by their appraisal, or what's called actual cash value of that vehicle.
The first approach must be that if the vehicle is a constructive total loss, you must work on making sure that the fair market value of your vehicle is at the highest end possible based upon various studies that are out there. Kelley Blue Book is just one of them, but there are others, and you want to make sure that your vehicle has been given the proper valuation based on mileage, based on condition, based on accessories, based on aftermarket products. All of this needs to be taken into account to get that FMV as high as you possibly can get it. And once you do that, and then of course the salvage value is what it is, and you want to argue with them that it's as low as possible, then you end up in a situation, if you still owe more than what you are going to receive from the property damage liability insurer, then you will be so-called upside down, and you're going to have to deal with your lender on what the amount would be that you will still owe on your vehicle.
Gap insurance is usually sold when you buy a new vehicle, or a vehicle at a dealership. They'll say, you want what's called gap insurance. A lot of people don't buy it because you're at the end of the car deal and you've added on all kinds of other things. But gap insurance is supposed to cover the problem when your vehicle's worth, or you owe more in your vehicle than it's really worth. And that happens. So sometimes after an accident, especially in new vehicles, they drive them off the lot. We just had someone recently, they had only owned the vehicle 2 weeks, but the vehicle value had gone down 10-15% in 2 weeks just by driving it off the lot. In that case, she had plenty of coverage, everything was fine. But if she hadn't, and that vehicle was worth less than she owed on that vehicle, and she didn't have gap insurance, she might have a deficit. So that deficit, like in this case, it might have been $20,000, I think, for the vehicle, is what they received. She owed about $22,000. If she didn't have gap insurance, that $2,000 she'd have to pay on her own. In this case, the gap insurance stepped in and paid for the $2,000 and covered it, and she was whole.
Gap insurance is a very complicated issue. First of all, it is seldom true insurance. It is usually simply a contract by a company that is an approved vendor for the finance companies that work with the automobile dealers. And it's not the same as insurance. And the reason that's important is Florida does have some consumer protection legislation that we can use as trial attorneys typically against insurance companies to force them to pay when they should pay reasonably, and we can get attorney's fees if they don't pay. So this is the type of situation where we would like to be able to help, but since gap insurance is not truly insurance, we don't have a claim for attorney's fees, and of course, the companies that are writing these gap contracts, they're well aware of this. They also have arbitration provisions, so generally speaking, it is a problem. That having been said, you should always get gap insurance because they typically actually do pay. They may not pay everything, they may not pay 100% of what you owe after you get the money for the salvage of for the demolition of your car. But the fact of the matter is, it's better to have it than it is to not have it.